Hope your day's going well. OG here with the latest on silver. The market has been moving faster than ever, so fast that my team made a video, deleted it, then made another, and deleted that one too. Prices are changing hour by hour, and anyone paying attention knows we've entered a completely new era for precious metals. Just recently, silver surged over 7% in a single session, while gold is holding steady near $5,000. Platinum isn't far behind, up more than 5%, signaling a broad industrial shift many haven't fully grasped yet. Mining, manufacturing, energy, all of these dynamics are changing, and today we'll break down what this new reality means for investors, manufacturers, and markets worldwide. Over the past 20 years, silver has transformed fundamentally. Industrial demand has skyrocketed with technological advances, while investment interest has grown beyond anything seen 2 decades ago. Back then, silver traded around $4 an ounce. Mining economics were challenging but manageable. Today, retail and institutional buyers are far more active, and mainstream awareness is growing, especially after silver crossed the $100 threshold. What's striking is the global hunt for physical silver. Investors and institutions alike are prioritizing inventory, ensuring they hold the right type of silver in the right location. London, New York, Mumbai, China. The mantra is clear: physical silver is king. This is fueling a supply-demand squeeze. There's plenty of silver in the world, but not always where or in the form it's needed most. Hoarding behavior is pushing prices upward. India continues to be a massive buyer, and this trend shows no signs of slowing. Prices in rupees have tripled in just a few months, reflecting a deep cultural and structural demand. Recycling and refining capacity remains limited. Converting old silver into high-quality, usable forms takes time, reinforcing current price strength. Small pullbacks may occur, but a major drop seems unlikely as long as gold remains strong, keeping the macroeconomic case for precious metals compelling. Industrial demand is evolving too. Solar panel manufacturers, facing high silver prices, are substituting copper in some applications. Estimates suggest 20–25% of manufacturers are exploring alternatives. Yet global economic growth and the expanding need for AI infrastructure and data centers will continue to support long-term silver demand. Even with some substitution, the overall trajectory for silver remains upward. Global market patterns are fascinating. Price premiums in Shanghai versus COMEX reflect tax and regulatory differences rather than supply shortages. Geopolitically, silver is increasingly seen as a strategic metal, prompting stockpiling by governments, banks, and sovereign entities. This adds another layer of demand to an already tight market. Mining dynamics are equally compelling. Junior mining companies have seen huge gains, while larger producers enjoy expanding margins. Peak silver production occurred in 2016, and we likely won't surpass it until 2030. Current projects won't meaningfully increase output soon, making existing producers and select development companies the most compelling opportunities. Even new investment won't translate into fresh ounces overnight. The world consumes roughly 1.2 billion ounces of silver annually, with mining supplying 900 million. Recycling, even at full capacity, adds only 150–200 million ounces. Fundamentally, the market remains tight. At roughly $19 per ounce, silver represents a $100 billion market, a small size in the context of global capital flows, keeping institutional and speculative interest high. Jurisdictional and geopolitical risks also matter. Bolivia, once considered uninvestable, is becoming more accessible. Changes in governance and mining policies open previously overlooked regions for potential production growth. Argentina and Venezuela are also shifting supply dynamics, while U.S. producers benefit from stability and transparency, making them highly attractive amid surging demand. Many mining companies are navigating this landscape with strong margins. Primary producers, historically operating below $20 per ounce, are now seeing extraordinary revenue. Rising costs haven't eaten into profitability, allowing companies to reinvest, expand reserves, pay dividends, and pursue new projects. This financial strength insulates them from some external risks. And governments recognize the strategic importance of these metals, potentially supporting the market rather than penalizing it. Market psychology is shifting too. Silver is decoupling from gold. Traditionally, silver mirrored gold's movements, but now it's catching up, hinting at the start of a new cycle. Corrections will shake out momentum traders and weak hands, but long-term fundamentals remain strong, driven by global demand, limited supply growth, and macroeconomic uncertainty. For investors, timing and profit-taking are key considerations. Some have held positions for years, waiting for a moment like this. Taking profits is reasonable, but abandoning positions entirely risks missing further upside. The rationale for holding precious metals hasn't changed. Rising inflation, currency devaluation, industrial growth, and global uncertainty continue to make silver, gold, and even copper essential for serious investors. These metals provide exposure to long-term structural trends that are difficult to ignore. Mining projects, both active and upcoming, are particularly fascinating in today's environment. Assets that were marginal at $50 or $60 per ounce are suddenly economically viable at 109 silver. Development is accelerating, and feasibility studies are moving forward for projects that could come online in months rather than years. Rare earth and gold co-deposits are also gaining attention, especially in the western U.S., where strategic importance intersects with abundant resources. A critical takeaway for 2026 is to manage expectations. Focusing too heavily on short-term price swings can be misleading. The real value lies in understanding operational capabilities, production economics, and the macro trends shaping demand. Silver is no longer just a commodity. It has become a strategic asset, influenced by industrial growth, technology, and sovereign stockpiling. Those who grasp this are likely to find themselves ahead of the curve, whether through physical holdings, equities, or strategic development projects. Behind the scenes, mining companies are quietly advancing projects once considered uneconomical. Boards and investors are actively evaluating opportunities across jurisdictions. Some of the most promising ventures combine silver, gold, and rare earth metals, dramatically enhancing project economics. Properties in the western U.S., for instance, are strategically located near infrastructure and offer accessible, significant deposits. These projects can move from feasibility to production within months, a rarity in mining. Investor behavior is shifting. Silver is no longer niche. Younger generations and retail participants are asking insightful questions about supply, demand, and geopolitical risks. Many try to time the market, but the more important lesson is that silver's fundamentals are changing. Peak silver production occurred in 2016, and this ceiling is likely to hold for at least another decade. New projects can only partially offset growing demand, ensuring supply pressures persist. Even amid excitement, companies remain disciplined. Step function production increases are difficult to achieve, and development projects still require 2 to 3 years to deliver new ounces. Recycling adds only modest supply due to refining constraints. The central truth remains: silver is a tight market where demand outpaces near-term supply, and both institutional and retail investors are taking notice. Geopolitics adds complexity. Silver is increasingly seen as a strategic asset. U.S. agencies are expanding stockpiles, while nations like China aggressively acquire physical silver. Banks and intermediaries often act on behalf of sovereign interests, quietly removing metal from circulation. In this environment, ownership, location, and form are just as important as total production. Those who understand this dynamic position themselves ahead of the crowd. From an investment perspective, a balanced approach is key. Primary producers provide revenue stability and cash flow. Development stage projects, while riskier, offer stepwise growth opportunities. Exploration companies are speculative, but could deliver substantial upside if new deposits are discovered. Together, this mix balances immediate returns with long-term potential. Margins across the sector have expanded dramatically. Primary producers, historically operating below $20 per ounce, now enjoy exceptional revenue at current prices, even accounting for rising operational costs. Strong margins allow companies to reinvest, pay dividends, and strengthen balance sheets. Concerns about government intervention exist, but silver's strategic and industrial importance provides some protection against punitive measures. For long-term investors, the takeaway is clear. Short-term price swings are secondary to structural trends, decoupling from gold, global industrial demand, demographic and cultural drivers, geopolitical stockpiling, and limited near-term supply growth all point to a favorable outlook. Volatility and corrections are inevitable, but the underlying thesis remains strong. Looking ahead, 2026 promises continued momentum. New boards, strategic partnerships, and emerging projects will shape the landscape. The interplay of supply constraints and growing demand will continue to influence prices. Industrial innovation, technological adoption, and strategic stockpiling ensure silver's role in global markets is stronger than ever. The silver market is at a fascinating juncture. Prices are high, interest is widespread, and production capacity is constrained. Investors must distinguish short-term swings from long-term trends. By focusing on quality producers, strategic development projects, and emerging exploration opportunities, participants can navigate supply, demand, and geopolitical complexity while positioning for potential gains. Silver is no longer just a metal. It's a strategic, industrial, and financial asset, reshaping how investors think about wealth, risk, and opportunity in 2026 and beyond.